Good morning, traders and investors. Roger Scott here, senior strategist for Trading Pub. It's Wednesday. It's August 30th. I don't even know if this month has 31 days or not, and it really doesn't matter from where I'm sitting right now. But we have a lot to talk about today. There's a lot of news, and I really hope you pay attention to this video. As you can see here, the Nasdaq is down about 23 points. The Dow is down about 12. This is complete randomness. There's not much data yet because the market is waiting for some really, really big reports. We've got GDP coming out today. They're expecting the quarter-over-quarter annual growth of about 2.4% and personal consumption expenditures between 1.6 and 1.9. If the number is higher than that, if the number is worse than that, that means that inflation is moving a little higher versus lower. So we have to see how the Fed spins this number as well. But we're looking for an annual growth rate of about 2%. So it'll be interesting to see how it impacts. I'm a big guy in the personal consumption expenditures department. I want to see this number stabilize. I want to see this number right at the expectation. Now, the other report we have is the International Trades in Goods and Services, which comes out also at 8:30. Now, remember, both of these reports come out before the opening bell. And we have the revised debit of 88 billion. Now it looks like it's going to be 90 billion. Obviously, the smaller the number, the better. It's not worse number, the better. So again, we're looking for the International Trades in Goods and Services consensus to be on the lower end of the expectation, not on the higher end. The goods and services deficit is expected to widen by 2 billion to 90. That's why I'm saying it'd be great if it was on the lower end of the range. We don't want a deficit. The bigger the deficit, the worse it is. Now, today we're going to focus on two sectors, and I'll explain to you why. Well, more than two sectors. But you've got pending home sales, and you've got where is it here? And you got the ADP employment report. Now, the ADP employment report, I can't speak this morning. It hasn't been really accurate. It hasn't been reflecting the employment situation on Friday's official report at all. So we're going to have to take that one with a big grain of salt. But the pending home sales will be interested. The two big sectors that I want you to pay attention to today, stock sectors, are the home builders. Home builders are very, very close. They look like they may, if they have a rally today, if the GDP number is solid and shows that inflation is not getting out of whack, we may see this price go all the way and swing high. So home builders is definitely one sector you want to pay attention to. The other sector you want to pay attention to is the energy sector. I drew this line a few days ago, like 2-3 days ago, and it's breaking above. And I said if it breaks above, we may have a nice rally. And I think we are going to have a rally taking us back to the 92, 93 level. So I'm bullish on energies. One of the things that I'm happy about yesterday is the fact that the S&P, let me just show you a different template here. There we go. That's the 50-day moving average. We closed above the 50-day moving average. Now, we're not out of the resistance area yet, but it'll be nice to see us break above, because if we do, we can break higher and go to this level. So I'm very encouraged by the fact that the S&P, the Dow, and the QQQ all closed above the 50-day moving average. That's a very bullish signal. But again, I want to see us break above this level right here, the 374.74 level. And on the Dow, let me just show you where the Dow is. See, they're all above the 50-day moving average. We want all of this above. We want the Dow above 35,000. This is a DIA, so it took 2 zeros off, but this one's at 350, but you get the point. So watch the Dow very closely. Watch the SPY, basically watch the SPY. Watch the home builders. Very, very important. Pay attention to XLE. If we break out of this area, there's a really good chance we're going to go higher. Now, why did the market rally yesterday? Why did the market break out yesterday? Well, I'll explain to you why. It's actually right here. The JOLTS report yesterday. See this report? Now, I want to explain this to you yesterday. So this is a JOLTS report. This is the job openings report. Job openings are lower. When you have less job openings, right? That means when you have too many people applying for jobs, that means you have way too many job openings. That means people have no problem getting jobs. When that's the case, they want more money. Employers have to pay employees more money because there's more supply than demand. Right now, job openings is going down, which means that means the job market is getting tighter. If the job market's getting tighter, that means the demand supply between the employer and the employee is shifting. And that means the employer has the upper hand, which means the employer doesn't have to pay as much because there's not that many jobs. The employee can't say, I'm going to go work somewhere else. You understand? Because there's not that many jobs. When there's a lot of jobs, you'll say, give me a raise or I quit. I'll go work across the street. Can't do that right now if job openings are getting lower. So the fact that employers have to pay employees less money is a deflationary sign. That's why the market rallied yesterday. I want you to understand. Now, let's get into the nitty-gritty, but I wanted you to understand the dynamics so you understand why the market rallied so hard yesterday. U.S. benchmark indices rallied on Tuesday as soft economic reports bolstered expectation that the Federal Reserve would pause its interest rate hikes in September, while investors also braced for a new round of economic data. But you understand, if the economy is getting tighter, if the inflation is going lower, because tighter job market means lower inflation, that means they don't have to take action. But I still think they will. Not in September, in November. We had the S&P notching a 2.5-week high. The blue chips posted a 1.5-week high. Tech-heavy Nasdaq posted a 3-week high. You can clearly see by this that the strength is in the Nasdaq, very, very much so. Again, here's the story, what I just explained to you. Economic data on Tuesday showed the JOLTS job openings fell to a 2.5-year low, weaker than expected. That's positive. That's deflationary. Consumer confidence wasn't good. That's not a great sign, but consumer confidence wasn't as important as the JOLTS report. Consumer confidence declining is not deflationary, obviously. That's inflationary. But again, that's a sentiment. We only have a 13% probability right now. It went from 20 to 13 because of the job reports yesterday in September, but there's still a 43%. It went from 50, about 49.5 to 43.6 of a 0.25 basis point rate hike in November. We've got earnings today, and I want to talk about this. CRM, that's a big retail tech company, CrowdStrike and Chewy. So again, keep your eye on the retailers. That's the other sector you need to keep an eye on. Home builders, retailers, energy. Those are the three. And the bond market. And again, you have home sales and you have crude inventories and you have a bunch of earnings. I didn't even get to so much data. I didn't even get to Europe. Europe is down, weighted by loss in utilities, I guess because energies are going back up, while investors await crucial data to assess the region's economic health. China closed slightly higher following gains in previous two sessions as a series of policy steps by authorities authorities. I mean, you could tell it's not a public country, right? To revitalize markets contributed to soothing investors' concern. That would be great. Japan always ticks. I could 95% of the time tell if Japan and Europe are up, if US is up. Index closed higher, rising to a more than a 2-week high as investors scooped up beaten down stocks. While an overnight surge in Wall Street, there was no overnight surge in Wall Street. Overnight for them, day session for us, boosted sentiment. Chip stocks advanced. That's really, really good. Again, today, keep an eye on HPQ. That's a home builder. It's a computer company. I used HP's computer company. Not so good. Texas Instrument, not so good. So there's some pressure on technology. Ambarello tumbled. Technology, not so good. But again, we'll see earnings on CrowdStrike, Salesforce, Chewy, Cooper, Five Below. Still retail, consumer, and consumer. More consumer. Now, earnings. Salesforce, they're expecting $1.74 per share. That's up 46% year over year on revenue of $7.9 billion. It'll be very interesting to see if they beat it. And here's the other expectations. 56 cents for CrowdStrike, Five Below 83 cents. You can get all of the goodies here, and Dell is reporting tomorrow. And last I checked, Dell actually looked really good on a chart. Let's see if it still looks really good. Yeah, it still actually looks pretty good. I have to adjust this a little bit. But yeah, it looks like it's still winding up. That's okay. Still winding up. I like these breakouts from swing highs. Let's look at Salesforce, right? CRM, right? Let's take a look here. Nah, it's below the 50-day moving average. I like the pattern. I like the pattern here, but I'm nervous because it's below the 50-day moving average. I'd like to see it close above the 50-day moving average at the close, and then I may get bullish because anything below the 200 and the 50, not so good. Not the best place to be. Always want stocks that are above the 50-day moving average. That's where the accumulation is looking right now. That's where the market is looking right now. Short-term scan, just to give you an idea of where we are right now, on a cumulative energy, healthcare, S&P technology starting to come up. QQQ, this is because of yesterday. On a 3-week basis, technology, energy, QQQ, they're starting to come up. But look at retail and home builders and Russell. So tech is starting to come up, energy starting to come up, healthcare is coming up, communications coming up, real estate is definitely coming up. But look at retail and home builders and Russell 2000. So there's still a lot of concern. There's still a lot of concern here. Retail, home builders, they're on the mid caps, small caps, consumer discretionary. Be cautious. Be cautious. Be really cautious. And be cautious with technology too. I'm still a big proponent of energy and healthcare. Now, today is Wednesday, and I give you a long trade and a short trade. Let's do that right now. I like giving you guys trades. I already gave you like 5 trades. And by the way, folks, if you're enjoying these videos, please subscribe to our channel. We just rebranded the Wealth Press channel as the Roger Scott channel. Like our channel, subscribe to our videos, comment below this video. I will literally respond the same day or possibly tomorrow. And most importantly, subscribe to our Telegram channel. I give you free tidbits there all the time. Go to rogerscott.com/Telegram. And remember, I opened up my VIP room for the summer. You could find the link above or below. It's at noon today because it's still Wednesday. At least if we still have our lights and internet because it's hurricane. So let's look at some stocks right now. Let's look at some stocks. I gave you a few that I really liked, but let's see if there's something else. I still love Lilly. I love Lilly. Is it a news to you that I love Lilly? I've been talking about it nonstop. Remember I told you about this stock right here, West Pharmaceuticals? Ba-boom. Yes, ba-boom. Remember I told you Digital Realty Trust? We've been picking them good. EQT, right here. Here's a good one. EQT, Power, these stocks right here. Power and Quanta, which is PWR, and EQT. I love these 2 stocks. You can't go, well, I don't want to say you can't go wrong, but I really like these 2 stocks right here. Power and Quanta. Now to the short side, oh boy. It's not going to be that difficult. It'll take probably 10 seconds or less. Dollar General right here. Dollar General does not have good relative strength compared to the market. Estee Lauder, I think this is going to turn right around. Perfect short right here. I bet, here, let's look at the RSI. Yeah, let's go to, let's take a look. See what we're dealing with here. Yep, look at that. Nice big hook, overdone, going to come right back down. So to the downside, EL, and what did I say? I said EL, and I said, or what was it? I just said it a minute ago. I'll find it. Not Dollar Tree, Dollar General, DG, this stock right here, DG. And to the upside, EQT and Power. Yeah, I think the stock is going to break down and go lower. You want the low-hanging fruits. Remember, like our channel, subscribe to our videos, subscribe to our Telegram channel, and join our VIP room. Now, before I let you go, I've got something important to tell you. You ever want to see traders' historic rate of success before diving in? Then you'll have to check out my innovative new approach I call modified options. You guys are going to love this. This strategy, listen to this, 89% win rate dating back to June 1st, the entire summer, and an average, and we didn't start there. It's good before then too, but I just wanted to highlight 89% in the last 3 months. Average return, including winners and losers, that's net 63% per trade. I don't think it's possible to do better, not for me at least. And yes, I'll also give you the historic win rate and a profit factor of each and every trade we issue. Today at 1 p.m. Eastern Time, I'm going to give you all the details behind how modified options have helped us increase our profit potential while also cutting back on risk. I'll also, a special surprise for 30 lucky traders. Click the link below. It's happening at 1 p.m. You can find the link on the page where you're watching this video, on the YouTube channel, above or below this video. You will find it. If you can't find it, send me an email. I got myself an updated email address, roger@rogerscott.com. Can you believe that? And support of Market Geek still works too. You guys have a great day. Any questions, comments, send me an email, roger@rogerscott.com. Can't be easier than that. I look forward to seeing you. And if you're in Florida, good luck today. No monkey business. Stay at home. Don't travel. Just take it easy today, okay? Bye, guys. Have a great day and be safe. Bye.